What happens when the world's most powerful currency becomes worthless paper? When the financial instrument that's anchored global trade for 80 years suddenly loses all credibility? We're about to find out, because every indicator suggests the dollar's reserve currency status is entering its final phase. And when it dies, the world as we know it dies with it. Most people think currency collapse means your money buys less at the grocery store. That's inflation. Currency death is something entirely different. It's when foreign nations stop accepting your money altogether, when trade partners refuse your currency for oil, grain, manufactured goods, when your paper becomes so toxic that even your closest allies won't touch it. And here's what should terrify you. The United States dollar is showing every symptom of terminal currency disease. 3 reserve currencies have died in the last 5 centuries. Each time, the nation that issued them went from global superpower to regional irrelevance. Spain's real collapsed in the 1600s. Britain's pound sterling lost reserve status in the 1940s. Both empires crumbled immediately after. Now the dollar is exhibiting identical warning signs, and stage 6 collapse is already beginning. But here's what nobody explains about reserve currency death. It doesn't happen gradually, it happens in cascading waves that accelerate beyond anyone's control. One day, international markets are functioning normally. The next day, panic selling begins. Within weeks, the currency is abandoned globally. Within months, the issuing nation faces economic devastation that makes the Great Depression look manageable. The mechanics are actually quite simple. A reserve currency works because everyone agrees to use it. Oil is priced in dollars. International loans are denominated in dollars. Central banks hold dollars as reserves. This creates artificial demand. Countries need dollars to participate in global trade, so they buy American bonds, which funds American spending. It's a beautiful system if you control the reserve currency. It's catastrophic when that privilege ends. Right now, cracks are spreading through the dollar system faster than anyone anticipated. China and Russia are trading in their own currencies. Saudi Arabia is accepting yuan for oil payments. India is buying Russian energy with rupees. The BRICS nations are developing alternative payment systems. Central banks worldwide are dumping dollars for gold at unprecedented rates. Each defection makes the next one easier. When Saudi Arabia accepts yuan, it signals to other oil producers that dollar alternatives are viable. When China trades directly with Brazil in local currencies, it proves the dollar intermediary is unnecessary. The more countries exit the system, the less valuable dollar reserves become for remaining participants. But the real catalyst for stage 6 collapse won't be gradual diversification. It'll be a confidence shock that triggers mass exodus. Think of it like a bank run, but instead of depositors lining up to withdraw money, it's entire nations rushing to dump dollar reserves before everyone else does. Once that panic begins, mathematics takes over. Here's the mechanism that turns gradual decline into sudden collapse. The United States runs massive trade deficits. We import far more than we export. Normally, this would bankrupt any country within years. But reserve currency status allows us to pay for imports with our own printed money. Foreign nations accept dollars because they need dollars for international trade. Remove that need, and trillions of dollars come flooding back home. When foreign demand for dollars disappears, those dollars don't just vanish. They return to the American economy all at once. It's like the money supply suddenly doubling or tripling overnight. The result is hyperinflation so severe it makes Weimar Germany look stable. Prices don't just rise, they explode beyond comprehension. But currency death creates problems far beyond inflation. International trade seizes up completely. American companies can't buy raw materials because foreign suppliers won't accept dollars. Supply chains that took decades to build collapse within weeks. Shelves empty. Factories shut down. The modern economy simply stops functioning. The government faces impossible choices. Tax revenues collapse as the economy implodes, but spending obligations remain. Social Security, Medicare, military payroll, debt service. They can print money to meet these obligations, but printing accelerates the currency collapse. Every new dollar created makes existing dollars worth less, which drives more foreign holders to sell, which forces more printing. It's a death spiral with no exit. Financial markets become uninvestable. Stock prices might rise in nominal terms, but only because the currency is dying. A stock that doubles in price while the currency loses 90% of its value means investors lose 80% of their wealth. Bond markets collapse entirely. Who wants to lend money denominated in a currency that's losing value daily? The banking system faces systemic failure. Banks hold enormous quantities of government bonds and dollar-denominated assets. When the currency collapses, these assets become worthless. Bank runs begin as depositors rush to convert dollars into anything tangible. The Federal Reserve can create unlimited dollars to bail out banks, but unlimited creation of worthless money doesn't solve the underlying problem. International relationships deteriorate rapidly. Countries that held dollars as reserves suffer massive losses. They blame America for destroying their wealth through reckless monetary policy. Trade partnerships collapse. Military alliances fracture. Nations that depended on dollar-denominated trade seek new arrangements that exclude American participation entirely. The most dangerous phase comes when the government loses the ability to fund essential services. Military contractors demand payment in gold or foreign currency. Soldiers' paychecks become worthless. Equipment maintenance stops. The military apparatus that projected American power globally becomes unaffordable. Overseas bases close. Naval patrols end. The empire contracts not by choice, but by financial necessity. Social order breaks down as government services disappear. Police departments can't buy fuel for patrol cars. Hospitals can't purchase medicine. Schools close because teachers won't work for worthless wages. The social contract between citizens and government dissolves when the government can't fulfill its basic obligations. Regional economies begin developing alternative arrangements. States might issue their own currencies backed by local resources. Cities could establish barter systems or adopt foreign currencies. The unified American economic system fragments into competing regional markets, each seeking stability through different mechanisms. This isn't theoretical speculation. We're watching early stages unfold right now. Foreign central banks are selling record amounts of treasury bonds. International trade is increasingly conducted in non-dollar currencies. Gold purchases by central banks have reached levels not seen in decades. The infrastructure for dollar alternatives is being built systematically by America's competitors. The timeline for complete collapse depends on how quickly confidence erodes. Gradual decline could take years, but history shows that reserve currency death, once it begins, accelerates exponentially. The pound sterling lost reserve status over just a few years in the 1940s. When confidence breaks, it breaks completely and permanently. What makes this collapse particularly dangerous is that no replacement system is ready. The yuan isn't mature enough to handle global reserve currency responsibilities. The euro faces its own structural problems. Gold can't facilitate modern trade volumes. We're heading toward currency death without a viable successor, which means global trade itself could collapse temporarily. The human cost will be staggering. Millions of Americans who saved in dollars will see their wealth evaporate. Retirement accounts, savings bonds, life insurance policies all become worthless paper. The middle class, which holds most of its wealth in dollar-denominated assets, faces complete financial destruction. Only those who prepared by holding real assets will survive the transition intact. But the collapse also creates unprecedented opportunities for those who understand what's coming and position themselves accordingly. Real assets become the new foundation of wealth. Land, precious metals, commodities, productive businesses that generate essential goods and services. These tangible assets retain value because they exist independent of any currency system. While paper wealth evaporates, physical wealth endures the transition and emerges more valuable in the post-dollar world. Energy resources become the ultimate store of value. Oil, natural gas, coal, uranium. These commodities power civilization regardless of which currency dominates global trade. Nations rich in energy exports will find themselves in commanding positions as the new monetary order emerges. Countries dependent on energy imports will scramble to establish direct barter relationships or adopt whatever currency their suppliers prefer. Agricultural resources gain strategic importance beyond their economic value. Food production becomes a geopolitical weapon when traditional trade mechanisms collapse. Nations with surplus grain, livestock, and arable land can dictate terms to countries facing food shortages. America's agricultural abundance could provide leverage in negotiations, but only if the political system remains stable enough to coordinate such efforts. Manufacturing capacity determines which regions thrive in the post-dollar economy. Countries that maintain domestic production capabilities will adapt faster than those dependent on complex international supply chains. China's industrial base positions them well for this transition. Germany's engineering expertise provides resilience. America's hollowed-out manufacturing sector becomes a critical vulnerability that takes years to rebuild. The geopolitical realignment happens faster than anyone expects. Traditional alliances based on dollar system participation dissolve overnight. New partnerships form around resource sharing, currency agreements, and mutual defense pacts. Nations previously considered allies become competitors for scarce resources and stable currency relationships. China emerges as the primary beneficiary of dollar collapse, but not necessarily as the new hegemon. The yuan lacks the institutional framework and international trust necessary for immediate reserve currency status. Instead, China leverages its manufacturing capacity and growing military power to establish regional dominance, while the global monetary system remains fragmented and chaotic. Russia benefits enormously from currency chaos despite its smaller economy. Energy exports provide immediate leverage over European and Asian customers. Nuclear weapons ensure territorial security during the transition period. Most importantly, Russia's experience with economic isolation and currency instability in the 1990s provides institutional knowledge that proves invaluable when other nations face similar challenges. Europe faces an existential crisis as the dollar system collapses. The European Union's economic model depends heavily on export markets that become inaccessible when trade financing disappears. Internal tensions between member nations intensify as each country pursues survival strategies that conflict with collective European interests. The euro itself comes under pressure as investors question whether a currency union can survive the breakdown of global trade. Middle Eastern nations find themselves in a paradoxical position. Oil wealth provides enormous leverage, but that wealth is currently denominated in dollars and stored in dollar-based financial instruments. The transition period creates both opportunity and vulnerability as these nations must quickly convert paper wealth into tangible assets while maintaining energy export relationships with customers who can no longer pay in dollars. Japan's situation becomes particularly precarious. The world's third largest economy depends entirely on energy and raw material imports paid for through export earnings. When global trade mechanisms collapse, Japan faces immediate shortages of essential resources. The country's massive dollar reserves become worthless just when alternative currency relationships become most critical for survival. Emerging market nations experience the most severe immediate impact. Countries that borrowed heavily in dollars find themselves unable to service debt when their currencies collapse against surviving foreign currencies. International Monetary Fund bailouts become impossible when the fund's dollar resources lose value. Debt defaults cascade through the developing world, creating humanitarian crises that dwarf previous economic disasters. The technology sector faces unique challenges during currency transition. While digital infrastructure remains valuable, the business models that generated massive wealth in the dollar era become obsolete overnight. Companies dependent on advertising revenue see income evaporate as marketing budgets disappear. Subscription services struggle when customers can't afford recurring payments in any stable currency. Cryptocurrency markets experience extreme volatility during dollar collapse. Some digital assets gain value as alternatives to failing fiat currencies. Others crash when their dollar-denominated backing becomes worthless. The regulatory framework for digital currencies breaks down when governments lose the capacity to enforce monetary policy, creating both opportunities and risks for crypto adoption. Financial institutions face complete business model destruction. Banks that invested heavily in dollar-denominated assets become insolvent overnight. Insurance companies can't honor policies when their reserves lose value. Pension funds holding government bonds see retirement promises become impossible to fulfill. The entire financial services industry requires complete reconstruction around new monetary realities. Regional banking systems emerge to fill the void left by collapsed international finance. Local banks backed by tangible assets and serving specific geographic areas prove more resilient than global institutions. Credit unions and community banks gain importance as they focus on local economic activity rather than international financial engineering. Barter systems expand rapidly in areas where new currency relationships haven't stabilized. Direct exchange of goods and services becomes common for local transactions. Professional services are traded for agricultural products. Manufacturing output is exchanged for energy resources. These primitive economic relationships provide basic functionality while more sophisticated monetary systems develop. The timeline for recovery depends entirely on how quickly alternative monetary arrangements can be established. If major economic powers cooperate to create new international trade mechanisms, global commerce could resume within months. If nations pursue competing currency strategies and engage in economic warfare, the chaos could persist for years while regional systems slowly develop stability. Social adaptation varies dramatically by geographic region and economic class. Urban areas dependent on complex supply chains experience the most severe disruption. Rural communities with local food production and simpler economic relationships adapt more easily. Wealthy individuals who diversified into real assets before the collapse maintain living standards. Middle and lower classes face genuine hardship as paper wealth disappears and employment opportunities vanish. The psychological impact on American society cannot be overstated. A population accustomed to global economic dominance suddenly finds itself economically isolated and financially impoverished. The national identity built around economic success and international influence crumbles when the currency that enabled both advantages becomes worthless paper. But within this destruction lies the foundation for eventual reconstruction. The reconstruction begins with communities that understand the most fundamental economic truth. Real wealth comes from production, not paper promises. When the financial system collapses, the people and regions that create actual value become the foundation for recovery. Farmers who grow food, manufacturers who build things, energy producers who power civilization, these become the new aristocracy in a world where paper credentials mean nothing. Local production networks emerge organically as communities realize their survival depends on self-sufficiency. Small towns that maintain manufacturing capabilities find themselves in commanding positions. Rural areas with agricultural surplus become economically dominant over cities that specialized in financial services. The geographic distribution of power shifts dramatically as productive capacity matters more than financial engineering. Educational systems require complete overhaul as the skills needed for economic success change overnight. Computer programming and financial analysis become less valuable than welding and farming. Engineering and medicine retain importance because they create tangible value. Law degrees become worthless when the legal framework for complex financial transactions disappears. Trade schools experience massive enrollment increases as practical skills command premium wages. The generational divide becomes more pronounced as older Americans who remember pre-digital economies adapt faster than younger generations raised on abstract financial concepts. People who lived through the 1970s inflation crisis understand hard asset preservation. Those who experienced the 2008 financial crisis learn to distrust complex financial instruments. But young adults who've only known digital abundance face the steepest learning curve. Regional specialization accelerates as transportation costs make long-distance trade prohibitively expensive. The Midwest focuses on agricultural production and food processing. The Southwest develops energy resources and mining operations. The Northeast leverages its remaining manufacturing capacity and technical expertise. The Southeast builds on its textile and chemical industries. Each region becomes increasingly self-contained as national economic integration breaks down. International trade relationships restructure around bilateral agreements that bypass traditional monetary systems. Direct resource exchanges become common. American grain trades for Saudi oil. Canadian timber exchanges for Mexican manufactured goods. These primitive but functional arrangements provide the foundation for eventual monetary system reconstruction. The federal government's role contracts dramatically as revenue sources disappear and spending obligations become impossible to meet. State and local governments assume responsibilities previously handled at the national level. Regional coalitions form to coordinate economic policy and resource sharing. The centralized American political system fragments into competing power centers, each pursuing strategies suited to local conditions. The dollar's death isn't a distant possibility. It's an accelerating reality happening right now, stage by stage, exactly as history predicted. Those who understand what's coming and prepare accordingly will survive the transition. Those who believe American exceptionalism makes us immune to economic laws will learn the hardest lesson of their lives. The pattern doesn't lie, and neither does the math.